live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with your humble, lovable, and squeezably soft koala bear of Wall Street, me, your humble and lovable host, David White, for another hour of trading excellence, if we can get there. Of course, this is June 16th. With all the news in the market, kind of surprising that we aren't up 20 points or down 20 points, one or the other. And, of course, right now we're pretty much flat on the S&P cash. A lot of volume, which I'm talking to Tom O'Brien on Friday during the breaks on Friday's show, and we were discussing the FOMC meeting and how today was going to be probably the day with any volume at all. This is the first day, by the way, in, a few weeks that we've had more than 2 billion shares coming into, I guess I'm an hour late. Maybe that's why 2 billion shares sounds, and I'm always looking at it at 2 o'clock. We've got a special episode here at 3 o'clock today, so we could upgrade our systems at TFNN and make our service just a little bit better. 2.1 billion shares. So at 3 o'clock, that's going to project out at about 2.7 billion shares. Not as much as I thought. But, what can you say? Anyway, we're going to probably get into lighter volume tomorrow. And, of course, even lighter volume till noon or 12:15, I think is when the news comes out from the FOMC meeting. And I'm going to be watching that. We've got, we're pretty much at the high end of what options tell us that we can expire at, that we can't close over this 1938 level would be problematic. Back above that would suggest it. Now, we've got a lot of IPOs coming out this week. We're going to get into those. And, of course, just the rest of the stuff going on. But we can hear crickets in the market right now. I imagine the New York Stock Exchange floor is a lot quieter than it was even 5 years ago. Almost nothing going on there anymore. I imagine if we were there today, everybody's probably sitting back drinking beer already, waiting for the close. And it is a quiet day. Okay, in 1903 on this day, Henry Ford launches the Ford Motor Company in a refurbished wagon factory in Detroit with 28,000 raised from 12 investors, including a coal dealer, a carpenter, and a man who made windmills. Probably the first venture capitalists of any merit. I wonder how much money those guys made out of all that. Would be interesting to know. But I digress. This week we were talking about IPOs, and we've got, I think, about 15 of them. So it is going to be another big week. At least Street thinks that the market will hold up through Friday to get a lot of these out. I could not find any confirmation that GoPro was coming out this week, although I've seen some articles make it look like it's coming out this week. I couldn't find any filings that actually that they had or were getting ready to go and kick this thing out. Maybe the rest of these things are being Monday already done. Maybe the GoPro, being a slightly bigger IPO than almost all these, would be a bigger issue out here. But, we've got a lot of biotechs, pharmaceuticals. These things are all being pushed out, and they're probably 2, 3, 5 years away from making any money. And kind of hard to think that you'd be sinking your cash in them now until they bleed through a lot of cash. And very tough for me to see if these companies had products that were going to go to for sale in the next 6 months or something. Maybe that'd be different. But this seems to me like a lot of paper being pushed out here on stocks of a dubious value. You can always buy these, almost always these pharmaceutical and biotechs, you can almost always buy them at a lower price in years to come after they burn through a lot of cash, which they're good at. In fact, you'd probably be better off just hiring a guy to burn cash out back. He would probably go slower than the scientists actually doing something in part of the building. Maybe last a little longer. But I digress. Of course, kind of interesting to see the market so close to zero, at least in the S&P cash here, when we had a lot more weakness overseas, especially in Europe. And could we end up that way? We could. But again, a lot of this is going to be dependent on how we close out here. I'm looking at that 1938 level as kind of the line in the sand. And if we can close back above it, it's probably problematic for the shorts, probably into that FOMC meeting. And I think we're going to see extremely light volume starting probably about 10:30 tomorrow morning, and expect that not to change until I think it's 12:15. We'll get in a moment. Fusion IO is going to sell itself to SanDisk. Sanjay, the CEO, was out on CNBC this morning, and he was sick. I'd say probably a great day for him to go out and be able to make an acquisition like this. Unfortunately, he was under the weather, but he pretty much got all the points through. I had always thought that some of these companies would be and could be huge winners, and I was wrong. And, of course, if you're going to be a stock trader and even an analyst, you're going to be wrong a lot. Hopefully you're wrong less than the market. And it is going to be problematic for a great deal of people that think that there's going to be any money in making disk drives in the near future. The problem comes from all the money's being made by the people that make memory chips. So SanDisk and MU, Micron, really looks like they're going to inherit that Western Digital and what's the other one? Seagate business. Everybody is slowly converging to one company in the spinning hard drive market, but we're seeing a lot more people now. FIO, Fusion IO, only made enterprise drives. They didn't make anything for consumers. It is very interesting to watch these folks build faster and faster hard drives for the enterprise, for web servers, that kind of stuff. And now we're seeing a lot of drives hit that 500 gigabyte level in the memory or the SSD market. That probably you can pretty much say that every 18 months you're going to see these things double. So if we went from half a gig today in 18 months, that pretty much says we'll probably see these things at half the price and 1 terabyte in 18 months. That may be enough to get past a lot of problems, except in the huge storage business. But certainly the frontline servers that are serving the same web page, these things can be put on these SSDs and dramatically reduce the cost of internet speed and time by serving these things much faster. And I think we're going to see this devolve into nothing but a memory company owning drive technology in the future. And, of course, we saw a little bit from HPQ, Hewlett-Packard, talking about moving into MEM resistors, which is a new technology that would probably wipe out most of SanDisk and Micron if this thing actually gets off the ground. That looks like that's somewhere between 12 and 18 months down the line if HP can actually get it out the door. Okay, now somebody's posted in the tin here something different than what I saw Wednesday, June 18th. I saw 12:15 this morning. We'll have to make sure this is right. They're saying 2 o'clock for the FOMC meeting and a 2:30 Janet Yellen press briefing following the FOMC announcement. And I had seen that as 2 hours earlier for pretty much both of those. So we'll have to make sure that that's right. But sometime early afternoon on Wednesday, we're going to see that FOMC meeting. And if history is any clue, we're probably going to see a lot of volume shrink as we go back into this. So if you're bullish, you want to see this market pull back on the light volume into that move. And, of course, if you're bearish, you want it to go up on lighter volume and maybe get a chance, another bite at the apple, as it were. We talked about ransomware a few weeks ago, and one of our wonderful listeners actually had succumbed to it on some of his machines. Some of the news over the weekend that is more troubling is ransomware has moved to hospital records and billing. Spotty so far, there are now cases being reported all over the United States, but one or two at a time. People are actually getting their records that are now all digital being corrupted and getting emails saying, hey, and if you give us $50 or $100, maybe you get your hospital records back. Now, normally, if you don't have a document, probably not a big deal. But I would be loath to think that if I was in this business of being in ransomware, that if someone died, you certainly are probably talking about 5 to 10 years. And probably since murder or associated murder charges are mostly state, you're not going to go to that club fed. You're probably going to go to some hellhole in a state prison. And I think I would be, maybe these guys just haven't thought it through. Probably a lot easier to go after somebody that doesn't have a death associated with it or a possible death. But we're seeing these hackers get more and more emboldened over the ability to basically extort money from afar. Most of these guys are over in the Russian sphere of influence, at least, if not in Eastern Europe. But it'll be interesting to see. Of course, everybody's been talking about Alibaba this morning. And, of course, they came out with new documents for their IPO. Still no real good idea when this thing's going to come out, but I'm thinking probably first or second week of September right now from watching the flow. Right now, this is the second bunch of documents coming out and showing Alibaba really slowing down in China. I think I was having a discussion with Tom O'Brien on what was going on and how these guys were trying to rush to get this thing out. Maybe a little short. Of course, we're seeing upwards of maybe 20 or $200 billion. And I think they're going to cut that significantly after these results. We'll be back after a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a two-week.
The Art of Timing the Trade, your ultimate trading mastery system, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade charts today by visiting Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technamental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technamental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Toll free at 1-877-927-SAVE-TRADE or phone call at 727-445-1044.
To the closing bell, we've got a market that's flat on the old S&P, maybe off 1 point. 2.2 billion shares on the New York Stock Exchange consolidated tape. That's everything from ECNs, the Amex, and New York Stock Exchange. Give you a pretty good idea of what's going on. 1.3 billion shares on the NASDAQ. And as we look at this kind of interesting move out here that we're seeing such a light volume, such a lackluster trading with so much news driving the market today. But one of the things we were talking about, I think this was 2 weeks ago, or probably 2 weeks ago, maybe on one of my shows or with Tom. I can't remember which one. But we were talking about why Yahoo was doing so poorly. It certainly looks like somebody knew that Alibaba's revenue path and, of course, their profit margins were starting to peak. And it's not uncommon to see a company go public at the height of what looks like to be a parabolic curve in the market. There may be money some years down the line, and it's hard to tell right now. But I think I remember the argument that, not argumentative, but the argument about Alibaba. I was talking to Tom, this is probably 4 or 6 weeks ago, about some of the articles I had seen where Alibaba had basically gotten into the top 40 markets in China. These are the cities that have high-speed internet, have people that can afford to have internet. And the question is whether or not a lot of people out there working in the fields were going to end up buying things from Alibaba. Had Alibaba hit the height of where they can grow? And it certainly looks like the documentation that we're seeing from Alibaba in this new IPO puts a little bit of, or takes a little bit of those rose-colored glasses off and shows us, yes, that is probably true. They've probably gotten to 80 or 90% of the people that they could ever get to in China. And everybody today is on the pundits' side. I've been talking to them about expanding outside of China. And, of course, probably changing a bit of what's going on. But we've heard evaluations up to $200 billion on Alibaba. Currently, everybody's kind of bounding about 150, and now I'm starting to hear 120 to 125 billion. They are only going to make, at least in this latest revision, about $30 billion of that at the IPO. That means the rest is going to be in stock. That stock can come out at any time, and it can be given in the form of compensation to anybody that works there, including the CEOs. Now, normally they'll hang on to it for a while, but I'm going to say that this one's starting to get the smell factor up just a bit, and I think that's kind of also putting a little bit of chill into the IPO market as we look at here. Of course, I've got 12:30 out here for the rate announcement. When I looked, I checked during the break. Of course, somebody has 230Z, John from Philly, and the Den, and we'll try to see which one of those is true later. Maybe I'll get probably find a much better estimate. Normally, you get these 2-dayers that is 2:30 after they have the announcement and have a briefing following. But that could get everything pretty wild. I would like to see what happens in light volume and maybe a little burnout in the options market. I've got a couple of stocks that look very interesting to me if they can hold up here through then, and I can buy some at-the-money puts as cheaply as they are today or even cheaper. And I'm going to give just a little bit of weighting on that and not jump the gun, but probably going to see volatility go up into that announcement. So maybe I'll buy some on Wednesday morning, but we'll have to be watching closely. The energy is setting up a bubble on the back of the Mideast, at least I think so. I'm starting to get the very kind of feeling that we had, I think it was 2006, when natural gas hit $16. I think it hit $16.78, if I'm not mistaken. I remember I shorted it somewhere around $16.25 on the way back down, maybe $16.35, and ended up covering it just under $14. Of course, a pretty big, huge move back then. Of course, it continued on down to about $8. It never stopped. One of the traders was the biggest single trade by an individual trader ever in the world. Made $1.7 billion on it. Anyway, we'll be back in just a minute, talk a little bit more about energy and get into some of the stocks that are moving. You can give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Anyway, we're looking at this, and I'm going to be very interested to see Andy come back tomorrow after, of course, in this hour. Normally he's in the 3 o'clock hour. But our man Andy Heck, and see what he thinks. But to me, I think that there was something going on in that 2006, I'm pretty sure, 2006 high in natural gas that really caused that whole bubble out there. And I can't remember now. It's been too long ago. But I kind of get the same kind of feeling out here that maybe at 106 we're starting to see maybe a little strain in this market. And many people saying that what we're going to see in Iraq is actually more oil flow, not less. It'd be kind of weird to see this market go up to some fairly decent highs, only to crater on out, 106.77. Of course, we've got gold, 172, and 170, 180. It was up a little higher this morning. I just don't see any energy in this thing. Still think we're going to see 225, 230, and then hopefully 1180. I'd love to get it down there and have everybody ready to jump off a bridge, give up the ghost, call the yellow metal a horrible relic, and maybe that would be the time to buy it. But I may not get my chance. You bulls may actually have it here, but I'm willing to wait for 1180 for a long-term buy, actually, not a trade. So I'll have to look at that. Anyway, we're going to go on to some of the other stocks making snooze today. And probably the one just out not too long, a couple hours ago, is Nuon. These are the guys that made Siri. If I can actually get this going here. So give me just a second. I think we've got it going here. There we go. Nuance Communications. Of course, they are the company that did Siri. They spun off their naturally speaking product before that. See a lot of ads from time to time on this. Anyway, certainly a sign of a breakout. A lot of people are thinking that they are under talks to be bought. And let's see what it said. Considering a sale, let me put it that way. I think that this company had some short interest on it. Nice time to blow off some shorts. The question is whether or not that technology is actually worth a great deal. There's lots of other people in that same business. I think it had a lot more to do with the timing that Apple had picked it up. But, of course, this stock took a huge run on many people thinking that they were going to get a huge cut out of Apple. Apple made a pretty good deal with them and didn't pay them a whole great deal, and that's when the stock really came back to earth. So interesting that they are out here pushing this market, but for the most part, not a lot happening. BFR. And, of course, there was a Supreme Court ruling today that said that they would not hear the court case from Argentina. This is the bank, Argentina BFR, down fairly decent volume. This isn't ever a huge volume stock, but this is extremely problematic for Argentina. Of course, they sold and bought, or they sold a lot of bonds that they didn't live up to and other financial agreements. Many people on Wall Street want their cash. And, of course, the gal that runs the show down there, she's a real socialist slash commie babe. And she really runs a country like the old saying that socialism dies when you run out of other people's money. Well, they've run out of other people's money a long time ago. Now the question is whether or not they're paying their debts to Wall Street. And the answer so far from the Supreme Court is by a resounding yes, by saying that they will not handle this case. So it goes back to the previous case, and at the best these guys can do is probably negotiate some form of payment on this. But look for probably Argentina to be under heavy, heavy pressure until they solve this and pay their debts from the last round before they get any other cash. Of course, we get a lot of food, beef from Argentina, but they don't have a lot of negotiating weight as far as I can tell. COV is another one out here moving today, and it is being acquired by Medtronic. This thing, of course, seeing a lot of acquisitions, not uncommon when you get very close to the end of the top of a market before a retracement. And I've been talking about the problem of being short a quiet market. If I was going to be short anything at all, it would be with options. I would not be short the equities right now for the examples that we've been giving over the last few days. Covidian COV is that. It did go up to 92.68, down to, what is it, about 85 now. So the question is what it's really going to be bought out for. Now, they're saying $93.22 per share. Kind of weird that this thing's back down lower than that. And maybe the idea is that maybe this deal isn't as solid as a lot of people thought. But certainly if you were short this stock, like a lot of others last week, you had your heads taken off. WMB acquired to Global Infrastructure Partners, GP and LP interest in midstream partners. This is the Williams companies. And upgraded at the same time also. This thing almost hit $60 today. And we're seeing kind of a lot of those stocks run shorts and then pull back to probably some more realistic value. But what can you say? If you got stopped out at 59.68, probably a little ticked off that you could get this back in the 56s now. But certainly it is a sign of a long-term breakout. I don't know if there's anything else out here to the left side. We're going to take a quick look. I don't think there is. Years, months, dates. See if there is anything out here. I don't think that there is. Back 4 years, maybe. Take a quick look. I don't think there is anything. No, there isn't. The stock is pretty much everything you want out here. We were talking about Yahoo, kind of taking it not well. And we've got a nice little doji out here that's saying that you thought you'd have a little bit more volume out here for the haircut this got. This thing's been in a never-ending trading range from about 33 to 37 bucks. But in volume, I thought it would probably be a little heavier than it is now. The question is just how many shares are they going to be allowed to sell into the Alibaba IPO? When they were at $37, basically valued Yahoo itself at about $2 a share, which is kind of interesting. At 35 bucks a share, I don't know what it'd be valued at. Free? It may be. And it may still be one of these companies that has absolutely worth nothing other than the shares in another company. But very interesting to see something like this trade. Of course, Alibaba is you can buy that in the second market. Second market is a place to buy and sell stocks that are not yet public. If you have the right credentials, you can get in. But I think you have to buy $1 million or $1.5 million or something and have 10 million. Can't remember exactly what the parameters are in that second market, but they're fairly steep, but not normally something for the average trader with a small line. But interesting, this thing did go up there and it did test that $37.30 high one more time on Friday with 13 million from 61 million. So certainly not a big surprise out here that we're looking for some weakness in Yahoo. Tesla, probably one of the big winners out here, not based on some kind of buyout. They had, and we were talking about it, it's not like the news was buried on Friday, but certainly the stock didn't move on it. Now everybody today is saying that the company's in talks with Nissan and BMW. I was writing about this in the Tech Insider at about 11 o'clock, and this stock didn't even budge. So the question is that truly the reason this thing is popping today, and or a great deal of articles about it over the weekend? I suspect the articles over the weekend, basically trying to do that. And again, this is the week of expiration. We're looking at a lot of stocks that have short positions, getting those short runs on them. Move on Model X. Didn't see that in the news today. Someone says that they're actually moving on the Model X. Hang on just a second. We'll see. TSLA. No reason. Nope. Looking through all the news out here, it's not listed about the Model X. Nothing. So I wonder, I'll have to check that out later. Oh. Okay, someone found a link for it. It's not in any of the news on my financial news section, but even if you got the Model X out here, I don't understand how they're going to make any more money. They are constricted by the amount of batteries they can buy. That's going to make them about 30,000 cars a year. And, of course, they're building their gigafactory that won't be ready for a year and a half. So I would say probably a pop here, undeserved, until they can make more companies and make more cars and make more money. But they're pretty much limited at 30,000 cars a year with the ability to get enough lithium and buy the batteries from Panasonic. Of course, they've been talking up the gigafactory forever. Of course, the last major high out here, just under $220 on February 22nd with 9.4 million shares. You already have 11, so maybe I'm wrong. LVLT, this one also getting a little bit of news and back lower. They were buying somebody out. Let me go back here and find it here. LVLT. Acquisition of TW Telecom, TWTC, and a stack, and I can't even say it, a cash and stock transaction valued at $40.86. Let's take a look at that. TWTC. Quickly. really nice pop in this one out here. Looks like the news was starting to leak on Friday. Volume did pick up, and of course you had the pop out here today. And what can you say? Let's see if there's anything else. I know DreamWorks had a movie come out, and maybe that's, let's see if I find it in my list of stuff out here. How to Train Your Dragon was weaker than expected at only 15 million shares. This thing came down. It was up to $28.90 on June 10th, down on heavy volume. And again, not done today, but it looks like it could get into that 4.7 million share range. We saw April 30th at $22.81. When anybody looks at any of these companies that make movies or that are in the entertainment business, they almost always have incredibly good EPSs and earnings per share, mostly because these things are so lowly valued, because you're always only as good as the last movie you ever made. If the last movie it doesn't really come through, you really are pretty much thrown against the rocks. And these are the companies that people love to hate. If you're an investor, if you're a trader, you love them because, of course, they move like a heartbeat more than just about any other company out here, based on winners and losers at the movie theater. GNC, I'm trying to remember what was the deal on this one. Downgraded neutral from outperform at Baird. What do we have here? Actually, not bad out here on GNC. I may be looking at this one later on. I've been seeing a lot of these stocks downgraded with absolutely no volume. My thought instantly is these companies downgrading these things and not seeing any movement is probably a point where, one, they're either covering their shorts, or two, buying and getting ready to go long themselves and wanting to wriggle out the last few people and the weak holders in the stock before they start moving it up. So I'll be watching this the next few days. You wanted this thing to break the May 7th low with 15 million shares. Last 2 days, we had 5.7 million shares, got 2.6 million shares today. And, of course, not a great stock, and it may take some while for this to consolidate out. Of course, if I am right, and this is basically bovine excrement thrown on by somebody trying to either cover the shorts or go long, it'd be interesting to watch out here. GNC Holdings, of course, sells vitamins. Another one to keep an eye on. We're going to look at stocks that have been testing their highs in just a minute. Be back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report,
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're going to look at a couple of companies out here that are rather interesting. I wanted to see how they were doing. Valspar is one. It's been hanging up here at these highs the last few days. We haven't been covering it. Looks to me like a few of these housing stocks, no matter what the news coming in, look rather toppy out here. Valspar, of course, a paint company. This thing, one of the ones I like in the fact that it's tested its previous high on 50% of the volume. But you like these things to really kind of fail within about 3 days of those tests. This one has not. And, of course, not uncommon during expiration week to see a lot of these stocks hold up. We were talking about MLN last week, another one of these hanging up here at these highs. This one doing a little prairie dog and a little turtling, a little sticking its neck out. And, of course, as they say or used to say in the ad business, run it up the flagpole and see if they salute in Peoria. Well, nobody's supporting and no one saluting or doing anything else out here. Very light volume. The highest volume here is $130, 1.6 million shares on April 4th. You get back into the last 4 trading days or 5, 378,000, 234,000, 378,000, 650,000. Of course, 282,000 today as it went back up, closed back down. Of course, what you want to see is this goes back below 130 to get a valid sell signal. And not an incredible move, but I think we can see a lot of these stocks like that. Let's try to remember what else is out here that was interesting. WPX. For some reason that rings a bell. But looking at WPX Energy, a lot of these energy companies kind of interesting to see how they're doing up here at these highs. WPX up against its last high on May 7th, 5.7 million shares, $22.60. When we get back up into this high on June 13th, 2.8 million. So another one at 50% highs. And of course, that's why I'm kind of wondering about how much longer, how much gas is left actually in the tank in some of these energy stocks. And if we don't see huge disruptions in the Mideast over the next few weeks, and just how high they can hold crude up into this. But 106.78, 106.76 currently on the current contract. Probably about, I'm looking at about a $15 premium based on disruption. And if that disruption finally goes away, how quickly could we see that $15 evaporate? My guess is you're going to get one more spike, and that probably will set a high, and I'm hoping that's about 110, or at least that's my projection. I think we could get a lot of the shorts run out of the crude market, and maybe that's where this thing's going to retrace. That would be about a $20 move on crude, and not too bad. Of course, we're off 14 cents today, so this isn't a one-way market. But we could get one more bad piece of news out of the Iraq-Iran area and just the global Mideast. Maybe that would put a little more pressure on this. But I'd love to see another good sign that early shorts have finally given up on this thing. Normally, that's where you see these big commodity markets turn around for the long term, not just a week or two or three, but something that could last 6 months or a year with pressure on it. And I think it's certainly making me think a little bit about that. I'm going to have to look at my charts again. The 2006 area, I kind of vaguely remember that 1675 for natural gas being the big deal. Anyway, we're going to see you tomorrow, not the same time. It will be back at 2 o'clock tomorrow, same bat channel. And remember to sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.